warm welcome to you, my dear children. Welcome back to the Unit 9, Chapter 4 of Unit 9. We started the Unit 9, a fresh lesson, few sessions back, and we talked about what the Unit 9 has to offer us. Yeah, the Unit 9 offers bank account and related transactions to the bank account, plus bank reconciliation statement, right? Here in today's session, we are going to learn about the bank overdrafts. Bank overdrafts, important activity, important common practice, which are offered by banks, and every business which has a bank current account, they usually enjoy this facility. Every business, every person who has a bank current account, somewhere in his dealings with the current account, at some point of his business life, people use the facility of bank overdrafts, because the bank which you have the current account in, that commercial bank usually offers this facility with the current accounts. All right, so bank overdrafts, let's learn what this facility is, what it is. Right, going through the text first, it says there are situations where banks allow their customers to issue checks for more than the existing balance. There are some instances where banks allow the customers to issue checks. The banks accept checks issued by the customer, even though there is not enough money in his account to pay for that check. The banks accept, even though there is no money in your account to pay for the checks that you have issued. You get it? Well, you might ask, so sir, from where is the bank? From where the bank's gonna? How is the bank gonna encash the check or provide cash for the check if there is not enough cash in the account? How is the bank gonna offer the money to that person who brings the check? Children, bank, from their side, from their end, banks fill up the remaining amount. The bank put in the necessary balance, the remaining balance. Yes, that is the facility. That is the facility of bank overdrafts. The facility of bank overdrafts. It's very useful, children. It's very useful. You have no idea. Sometimes there are businesses which run with this facility. If this facility is not given to them, their business would not run. They just would not be able to run the business. Yes, it's true. So, children, again, back to the text. There are situations where bank allow customers to issue checks, send checks, even exceeding, right, even more than the amount which is in their bank current account. Example, if, a quick example, if the balance of the current account is 50,000, bank will accept a check of, let's say, 70,000. The bank will accept a check of 70,000. So how is the bank going to pay? You ask me. How is the bank going to pay? So how is the bank going to pay? If only 50,000 is in my account, the bank is going to put in the remainder or the shortage. The bank is going to fill in 20,000 from bank's money, or from their end, or from their side. This is the OD. Okay, that is the OD amount, 20,000. All right. Bank will accept a check of 70,000 and provide the money, 70,000. The entire 70,000 will be provided to the customer. Bank will not say no, in the account there is insufficient funds. Well, banks, in some instances where banks do not offer the OD facility to certain customers, the bank will not actually fill in the remainder or the shortage. The bank will not give an OD. The banks always, they are not bound to give ODs. All right, you have to remember that the banks are not bound. They are not like bound to give every customer ODs, right? It depends on the bank and the customer. The decision of giving or not giving the OD, it's on the bank. The bank, the manager, and the it's entirely on the hand of the banking officials. All right. So this facility is known as a bank overdraft. In short, we call it OD. Yeah. That you have heard. When I say OD, some people were nodding. ODs. Oh. Yeah. That word you might have heard. OD. If the business issues checks exceeding the existing bank balance, the total of the credit side of the bank account of the business exceeds the total of the debit side. Okay, now we are down to the bank account. From the business side, from the business point of view, how these ODs are treated. From the business point of view, from our side, let's say this is an example of our business, my business. All right, no problem. I'll take the example on me. Let's say the example that we are going to take is about my business, okay, and you are my bookkeepers. You are working in my business as bookkeepers and accountants. Okay, right, let's get together. If the business issues exceeding the existing bank balance, checks are issued by me, by my business. Checks are issued by the business, by my business, all right, where you work as the bookkeeper. Checks are issued exceeding the balance of the bank account. In that case, children, total of the credit side, this is the credit side, right? No, this is the credit side. Okay, total of the credit side, this side, total will be higher than the total of the debit side. Credit total, okay, credit total, this total, credit total is higher than the debit total. This is higher. Got it? Because more than the money which is remaining in our bank account, we have paid out. Got it? So the credit side is higher than the debit side. That's what it says, huh? Yeah. As a result, the credit balance appears in the bank account. The BBF, the balance brought forward. You remember balance brought forward? You remember how to balance the bank account? We did it in the previous session. Yeah, the last session was entirely about preparing the bank account with the relevant ledger accounts and including discount accounts. The previous session, children, you have to refer to those sessions before you come and watch and try to learn about bank overdrafts. Yeah, you can actually learn from this session onwards, but you must have the base knowledge of how preparing the bank account goes, how the preparation of the bank account goes. You should have that base knowledge. Okay, if you don't have, you have to refer to the previous sessions and learn how the bank accounts are prepared in the proper manner. So in the previous session we learned how to balance the bank account. Yeah, so when the balance carried down is taken, children, let's say, well, I'll just erase this example where I showed you the bank ODs and how bank ODs are given, right? And I'll use this space to draw a quick bank account. All right, I'll draw a quick bank account right here. One, and the center line little things lead to big things. Little things lead to big things, right? Yeah. I'm not gonna name the headers. I'm not gonna put the header row. Just a quick example. Okay, let's say in the debit side, children, in the debit side we have amounts like we have a BBF 55,000, then we have cash 10,000, sales 25,000, okay, and data 5,000. All right, let's fill in the credit side. Let's say in the credit side we have entries such as creditors, checks paid to creditors, creditor Sita stores 60,000. Another check has been issued to let's say Banda traders. Let's say the check is 35,000. Rent is paid through the bank account by a check. That rent is 50,000. Such as expenses or payments such as these. All right, we'll put another amount and 70,000, another check of 70,000. Mention the check number, and a 70,000 check is issued. Now children, now you know that credit side is kind of having a higher value. When you sum up the credit side, the credit side total will be greater than debit side total. All right, did you notice that? There's a 70,000, 50,000 and a 60,000. Here only 5, 25 and 10. On the debit side, the total will be a little less than the credit side. Credit side total will be a little higher, right? Can you notice that? Yeah, this is the kind of situation that here in the text they have tried to explain. This is the kind of situation that they are trying to explain here. Okay. If the business issues checks exceeding the existing bank balance, total of the credit side of the bank account will exceed the total of the debit side. Total of the credit side, right? This is what you should take it to your head. This is what you should take into your heads. Total of the credit side will exceed the total of the debit side. Total of the debit side. Total of the credit side will be higher than the total of the debit side. This side. Okay. Let's see our example bank account. Now let's add up the debit and credit sides and take the sum totals. All right, I'll draw the sum boxes here. Now I'll add the debit side. I'm adding the debit side. Okay, this side. 55 plus 10, 65 plus 25, 90 plus 5, 95. We get a total of 95 on the debit side, right? Yeah, 95. But when you add up the credit side, children, you get a higher total, like a higher sum than the debit sum total. Let's add and see. 60 plus 35, 95. 95 plus 50, 145. 145 plus 70. That's a big amount. That's a big difference. It's a big difference. Yeah. All right. So this 215 should be on the debit side sum box 2. Right? That is how we balance. You remember how we balanced. The greater total, children. The greater total, whether it is on the debit side or whether it is on the credit side, it doesn't matter. The greater total, the higher total should be in both sides sum boxes. In that case, children, I'm not going to mention this 95 in the debit side sum box. I have to mention 215 on the debit side too. 250 on the debit side too. 215. That is what the text is talking about. All right. That is what the textbook says here. Exceeding the existing, if checks are issued, if business issues checks, yeah, exceeding the existing bank balance, the total of the credit side, this will exceed the total of the debit side more than the debit side total. The credit side total will be higher. That's what the text says. Okay. Then as a result, okay, as a result, a credit balance appears in the bank account. A credit balance appears in the bank account. Balancing the bank account. When balancing the bank account, children, when balancing this bank account, something like this is going to happen, right? You take the higher total or the greater total, that is 215. Okay, you take the greater total, that is 215. 215,000, and you minus or you subtract the lesser total, which is on the debit side, that was 95,000, and you take the difference. Difference is 120,000. This is the difference. This difference is what we call the balance. This is what we call the balance. This is the balance. So the balance carried down comes to this side, 120, because this is the lesser side. Debit side is the lesser side. The less amount, the shortage is 120, the difference is 120. So the balance carried down comes to the debit side. Balance brought forward goes to the credit side. This is called a credit balance. That is called a credit balance. Yeah, the balance brought forward. When the balance brought forward comes to the credit side, balance brought forward, when it comes to the credit side, you call it a credit balance in the bank account. You call it a credit balance in the bank account. That is a bank overdraft. That is the overdraft shown in our business bank account as a credit balance. Credit balance. You got it? I hope you got it, children. I hope you understood this. Right, good. Okay, let's move on. Let's move on. We are talking about how bank overdrafts are shown, how they appear in our business bank account, in the business bank account. Okay. To end the paragraph, a credit balance appears in the bank account. This credit balance of the bank account is known as a bank overdraft, which is considered as a liability. It is a liability of the business because the bank provides the remainder or the shortage from bank money. That is a short-term loan. Short-term loan given to the account holder. I, the account holder, should pay it back. I should pay it back to the bank. All right, you understand? The bank does not just provide money for our checks just because they love us. The bank thinks, wow, the person who has sent this check is that sir. So this is a check sent by Prabhat sir. My God, he doesn't have enough money in his account, yeah? But he has sent a check. We can't let him down. Let's give the shortage. Let's fill in the amount which is short. Yeah. The bank balance, his account balance is 50,000, but he has sent a check of 70,000. Only 20,000 is the remainder now. let's put it from our pockets. No, it doesn't happen, children. It doesn't happen that way, right? The bank does not give overdrafts just because they love us. They charge interest. They consider it as a loan given to us. They charge interest. Okay, so it's a short-term loan and they will charge interest on this loan. We must fill it, we must pay it back to the bank within a few weeks' time. Sometimes even the bank will urge us to settle this overdraft within 1 week. It's a very short-term loan. Okay, got it? So it's a liability of the business. When checks are issued in excess of the existing bank balance, and when bank makes the payment to them, the account holder becomes a debtor to the bank, so on and so forth. When it is a bank overdraft, we become a debtor to the bank because we owe the bank. We must pay it back. Going on, we have an example. Children, I really hope that you understood how bank overdrafts work, how they are offered by banks to businessmen, and how, as businessmen, how we record, how we indicate the OD in our bank accounts. Okay, there was a favorable balance, debit balance in the bank account of Samadhi of 12,000 as at 1st July 2021. As at 1st July 2021. Following transactions took place during the month of July. Okay. Now, in Samadhi's business, she had no worry because she had a positive balance, a debit balance. See, a favorable balance, a debit balance. She had no worries when the business started because the balance was positive, favorable balance, positive balance. Okay, debit balance, positive balance. Positive means debit. Yeah, in the bank account to start with, like 1st of July. And the business transactions started for the month. Okay, yeah, let's look at how the transactions has taken place during this month. 5th, cash deposited in the bank. Let's draw the bank book, shall we? Well, didn't you notice that this is an example exercise? No need to draw, the bank accounts are drawn. And they have given some information about deposited checks and issued checks. Bank account will be here. Here you go. This is the bank account. Okay. Yeah, this is the bank account. Let's see how the bank transactions have been recorded in that bank account. Starting with the positive balance, debit balance, and it is 12,000. Okay, there is no need to again and again explain how the balances are recorded. How the balances are recorded at the opening or the starting date of the month. This is the starting date, which is 1st of July. 1st of July, the balance, opening balance is 12,000. You know, right? You know how to do this. Why don't you tell me? Yeah, recording the opening balance, the BBF. Yeah, opening balance, the BBF. Debit side. Yeah. All right. Debit side as BBF on top of the debit side 12,000 as the first entry in the bank account. Let's see. Let's see. That's right. That's right. On the top of the debit side as balance brought forward 12,000 in the bank account. That is the opening balance, right? Good. Then first transaction children. First one, cash deposited in the bank. Cash deposited in the bank 8,000. Double entry, I'm not going to ask you, just tell me. I'm not going to ask you, just tell me. Yeah, bank money increases or cash goes to the bank. Cash deposited in the bank, right? Bank money increases, so bank debit, cash at hand, from that cash at hand 8,000 goes out, so cash at hand decreases, so cash credit. Cash credit, bank debit. Let's check in the bank account debit side. It's here. All right. You see this? It's 8,000 in the debit side. Description is cash. Description is cash, right? That is the description. Because cash is credited, cash account is credited. Cash account, or you can say cash book. Cash book is credited and bank is debited, saying the description saying cash. Bank is debited. Right? Moving on. This entry is done, so let's take it. Next entry, deposited checks. Check that had been received from cash sales 9,000. Cash sale, for a cash sale, 9,000 of a check has been received. Check number 20. Okay. Deposited checks, let's first see how the deposited checks are recorded. Deposited checks from the first check on 8th, check number 20, amount is 9,000. Let's check that. Let's check the check. Let's check the first check. Yeah. Wait, did we get that right? Yeah. 8th July, check number 20, 9,000. How the double entry should be recorded, children? How the double entry should be entered? Checks deposited directly in the bank from sales. That means not from the cash at hand. The check was not in your till. From directly cash sales, you got the check and sent the check to the bank. What is debit and what is credit? Tell me. Bank debit, that's right, because bank money increases. Bank debit, cash credit. It's you who said bank debit, cash credit. And it's wrong. It's wrong. Not cash credit, children. Bank debit, sales credit. Okay? Because just like I told you few seconds ago, the check was not in your cash till. The check didn't go from your cash register. It was not kept in your cash drawer. It was directly received from sales, from a customer. The check was received. And without putting it into the cash till, it was sent to the bank directly. Did you get the picture? So the cash is not relevant here. Bank money increased. So bank debit, sales credit. Check the bank account debit side. It's here. 8th, check number 20, 9,000. All right. A sales account is not shown because we are just checking the bank account only here. That one okay, done. That one done, completed. Next, 15th, check that had been received from rent income, check number 115. 114. 15th, check number 114, amount is 7,000. The check has been received from rent income. All right, again another check received, so money coming in, more coming, more coming in. So more means more in the bank account. The balance increases. 15th, debit side, 7,000 is there. Okay, so we'll take it. Check number 114. Next transaction, 20th, check number 95, a check received from debtor, 6,000. 20th, check number 95, the check was received from a debtor, from a guy who owed us money. He has brought in and he has given us a check, a debtor. Just tell me the double entry again. Randomly, I'm going to ask you what is the double entry in such transaction. Tell me, what is the double entry? You tell me. Tell me. The double entry for this. Can you see the transaction? A check that had been received from a debtor, 6,000. Yeah, money goes to the bank. Bank debit. Sales credit. Sales credit. No, wrong. Not sales. Bank debit, debtor credit. Okay, debtor credit. Let's check in the debit side of the bank. Check number 95, 6,000 is there. Okay, right. That is also done. Now all the deposited checks have been recorded. We cross-checked with all the entries in the bank account. This section is completely done. Now the next section, issued checks. Issued checks means we are issuing checks. We are paying with checks. So customers, they get our checks, they go to our bank, they get the money, they encash the checks. So the bank balance decreases. Bank balance decreases. Okay. First issued check. Let's use another color. First issued check. 12th, we have issued a check to pay creditor, 16,000, check number 33. Bank balance goes down when we pay more and more checks. When we issue more and more checks, they go and get the money, they encash the checks. So the bank balance goes down. Bank credit. Let's check in the credit side. Check number 34. 35. Is it 35? Yeah, 12th. Check number 33, right? Check number 33, children. Check number 33, okay? Check number 33. Pay attention. Check number 33. Amount is 16,000. Amount is 16,000. Okay. Paid a creditor. 12th. So 12th, paid a creditor. Okay. 16,000. Yeah, this is the entry. The check number has been misprinted. Printing mistake. Here it should be 33. Yeah, I corrected it. Okay. Right, so it's done. First issued check is done. Next check. 22nd. To pay the salary. Check number 34. 15,000. Amount is 15,000. Okay. 22nd. Check number 34, salary. Again, bank balance goes down, 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 because we are paying more payments. Check number 34, 15,000 on 22nd, bank credit. Last one, 25th. Check number 35. For purchases, we have issued a check of 25,000. That is also there. 25th for purchases, check number 35, right? Done. Now all the deposited checks and issued checks has been recorded. Let's balance it. Let's balance it. Yeah, all done. This section also done. All the issued checks also done. Let's balance the bank account. Check the balance. No, not the balance. Check the total. Check the total, children. Total of the debit side, total of the credit side. And you guess which side is having the higher total. 12,000 plus 8, 20, plus 9, 29, 36, 42. 42,000 on the debit side. 42,000. Debit side total 42,000 from here on top, from the top of the debit side. When you take the total becomes how much? Total becomes, you don't take this, you don't take this, children, you don't take this. This is the balance. See, they have found the balance. We are still finding, still calculating. We only just took the total of the debit side. 12 plus 8, 20, then 29, 36, 42. We got 42 on the debit side. Okay, this is debit. 42. Let's take the total of the credit side. Credit side total. 16 plus 15, 31. 31 plus 25, 56. This side we get 56. Which side is having the higher total? Which side is having the higher total? Is it the debit side or is it the credit side? Which side is having the higher total? Credit side is having the higher total. This side is higher. So mention the total 56,000 on the, inside the sum boxes, both sum boxes. Mention the higher total, both sides, 56 and 56. Then take the shortage of the debit side. What you do is minus 42,000 from 56,000 and you get 14,000. That is the balance carried down. That goes here. That goes here. The balance carried down. That is the balance. Okay? See, children, it's not something that we haven't done. We have done this. The only difference is balance carried down comes to the debit side and balance brought forward is in the credit side. Okay, brought forward is on the credit side, which means it's a negative balance. In other words, it's a bank overdraft. This is what we call an OD. Yeah, good. That's that, children. Likewise, when the bank account has a higher balance in the credit side, higher, okay, that credit side total, not a higher balance, higher total, higher sum total in the credit side, that credit side sum total, the sum exceeds the debit side sum, the debit side total. That is when a negative balance is created. Negative balance, which means the balance carried down is in the debit side, the shortage is in the debit side, and it is brought forward to the credit side again. It's a credit balance in the bank account. Right, children? With that, we wind up this session. We learned about bank overdrafts and how bank overdrafts are provided by banks, plus how bank overdrafts are indicated, shown in your business bank account. Okay, to end, let's go through the text. As shown in the above example, the total of the credit side is 56 and the total of the debit side is 42. There is a deficit of 14,000. That is what I call a shortage. This is a shortage. A deficit or a shortage of 14,000 in the debit side. Yeah. As a result, credit balance of 14,000 appears in the bank account. As a result, a credit balance of 14,000 appears in the bank account. Credit balance. Yeah. That is what we have shown here. The credit balance. When the balance brought forward is in the credit side, it is called a credit balance. Well, earlier we learned how the balance brought forward is in the debit side. Then it's a debit balance. Yeah, simple. The balance brought forward is called the balance in the account, in the bank account, or even in the cash account, or even in any other ledger account. BBF, balance brought forward, is what we call the balance of the account. So when it is in the credit side, it is credit balance of the account. In this account, there is a credit balance. This is the bank overdraft. All right. I hope to see you again, children. And in the next session, we are going to start bank reconciliation statement. Bank reconciliation statement. What is bank reconciliation? How we are going to prepare it? What is the importance of it? And how questions come from bank reconciliation. So until then, I hope that you have understood everything which was done today, and hoping to see you again. Thank you.